What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where, as always, I do a technical analysis and give you my thoughts on the tickers listed up above here. We, of course, have our broad market, we have our core list of companies, and this week I have 8 trade ideas to share with you towards the end of the video, so certainly stay tuned. Many of these trade ideas did come from Discord members, so if you want to chat with myself and other traders in real time, definitely check out the links down below in the description. The Discord is one of them, and it's completely free to join, so I hope to see you inside. Without further ado, let's jump into the charts. Kicking things off here on our SPY weekly chart, talking about candle structure and location as we always do. For structure, we have a full-bodied green candle, very little lower wick and even smaller upper wick here. And of course, that's bullish, right? We closed strong here at the highs, which brings me to my next point, location, new all-time high close. And if we just think about the prior range candle and split it up into thirds, roughly, you'll see that we never even violated the first third of, that range. So to me, once again, more bullish. It would have been more bearish if we actually ventured down into the lower 2/3 of the prior range, but that simply wasn't the case. So structure and location, both bullish. The one thing that you might start to raise an eyebrow at is down below here, the volume, of course, but just, although it is lower than the prior week, make pretend with me for a second and just extrapolate that high off to the left, and you can see it's kind of on par with all of the other all-time high closings that we've had in the past. So really not much of a concern there, the fact that volume was lower than the prior week. In terms of other structure from the weekly perspective, we've been talking about this sort of resistance trend line that looks like this, how we've been butting our heads up through it, and now essentially we've got to close above it. It doesn't mean that we're hunting for shorts, timing a market top, none of that at all. As you know, we're fans of buying dips in bull markets as opposed to, again, trying to time tops. It usually doesn't end well, and markets can go higher than you think. So just because we're above doesn't, again, mean we're looking for shorts. We're just not favoring new longs at this point in time. If we scrunch the chart up to just bring into perspective some of the support trend lines that we've been using for the past number of weeks now, this one certainly far away from that. And if we clean that up and draw in our major support trend line that's been in play for quite some time now, you can see anchor low here, touch number 1, touch number 2-ish, 3, and certainly 4-ish right here as well. And that support trend line is still very much intact. So in terms of the weekly uptrend, nothing has really changed here, right? So all good, all still remains bullish, but not favoring new longs at this point in time, simply due to location. If we drop it down to the daily now to talk about tradable levels as we head into the rest of the week, or the new week, excuse me. If you watched the midweek market update, right, we discussed in length this gap right here. If you're not familiar with how I removed this lower wick from Thinkorswim, definitely check out this video in the top right-hand corner. It'll show you how to do that so you can keep your charts nice and tidy going forward. But anyways, it's worth noting, right, that the gap never filled on the one red day that we had all week, that pullback day. We didn't even make it to the top of the gap. So I do think it's noteworthy that once again, we're just going to echo the sentiment that sellers here remain rather weak. They're really not building on the momentum, the small pieces of it anyways, that they seem to get at certain points throughout the day. So we're still favoring upside here, but again, not really looking for new longs until we put in some period of consolidation. One thing I do want to bring up, and I've been talking about it in the Discord for some time now, is symmetry, right? In the market, I'm not a huge believer that it needs symmetry or that it loves symmetry, one thing or another, but it certainly is noteworthy that on this last bounce, we had to move higher, gapped higher, a couple of small days, and then moved higher again. Okay, this next one, notice how we come here, a couple days higher, gap higher, and then consolidation. In my opinion, this is starting to echo that, right? So we had a move lower, we moved higher, gapped higher, and now we're starting to go sideways again. So I'm not saying we have to be in store for more sideways consolidation, but I would say in terms of market symmetry and just the fact that the market could use some time sideways to digest the move, it's not completely off the table, right? So some things to consider as we move forward into the upcoming week. Now that we have essentially broken out over this 447 mark and pulled back to only recapture it the next day, I would start to use that as a line in the sand. If we start trading underneath it, if we start seeing acceptance underneath, it could shift the sentiment essentially for, something like this to happen and maybe fill that gap. That gap fills from 445.14 down to 443.71. And again, that's only if we start seeing acceptance underneath 447 would that be in play? For right now, there is kind of a first up before we get to 447, just $1 higher at 448. That was a very important intraday level that held as consolidation lows in here and really a shelf before the breakdown from Thursday. So please have that on your radar as well as an area of support. I would say the ideal look for SPY going forward would be to build out consolidation like this. Again, something that might look similar to this, digesting price action, this move higher through time as opposed to through pullback. Again, more bullish than bearish, of course, because we're simply not trading lower. So in that case, if we put in an area of consolidation, start to treat it as a box, something like this, and then you look for the breakout up and over, at this point, you know, the highs right now are at 450. There's no saying that it can't move higher into the upcoming week. But again, if it does consolidate in a range like that, that would be the play, right? So to the upside, whole and half dollars, intraday levels that do form. If this is the area of consolidation and there is a breakout of that zone, right? As always, we're looking for range doubling rules, and that would sort of bring us, if we just hover the cursor there, up to about 452.88, call it 453 as the next major overhead target. So those are my thoughts here on the S&Ps. Things do still look bullish, but I would say, again, be cautious of new longs. Obviously, the Fed speak had a lot to do with the movement on Friday. We'll see if that holds up or if it starts to consolidate and the euphoria from that announcement sort of dies off into the upcoming week. Keep an eye on volume. Obviously, that increased on Friday. If it continues to increase on the blue sky breakout, you're going to have more confidence in that move. Next up, we have the QQQ, and of course, this is the proxy for the NASDAQ, and the same sort of sentiment will be echoed here. It's not as symmetrical as what we saw in the S&Ps. Sure, you could make the argument that this is the equivalent of this move right here, and now we're due for some period of consolidation. It's just not as clear or evident to me as it was there in the S&Ps. So for now, we'll leave that off the table and instead just talk about the little consolidation here. Certainly a daily bull flag was put in, and we're starting to break out. We did close above that, so we're going to favor upside continuation. As we know, we're basically looking at whole and half dollars intraday levels that do form. We did already fulfill, right? If we do something like this, the range double breakout target here, that was at 376. So that's no longer really going to help us in terms of navigating forward. Key support underneath is going to be here at 372.98. Just call it 373 the whole dollar. Any retests should be met with support for a move like this. Maybe we put in the consolidation. We don't actually break out. We just go back on up to the all-time high here at 376.56, in which case have that on your radar as a potential area for resistance somewhere around here, right? So looking at that, that would be, again, a nice bull flag, something like this. And boom, that would, there you go. Looking for the break, something like that in the near-term future. If we really break down under that 373 mark, look for the gap to fill underneath. That would probably have to coincide with the S&Ps moving back down as well. Underneath 369 technically fills down towards 368.13, but not really anticipating that. If we do get here, however, be on the lookout for reversal candles, right? Something that would look like a daily hammer here would make sense for the reversal back higher simply because it would be a back test of the prior breakout point. So 369 looking for a reversal there if there is some sort of turnaround up here off of the highs and we get a pullback through price as opposed to consolidation sideways through time. And last but not least, we have IWM Russell 2000 and the small caps, and this one's starting to make and show its hand a little bit. Remember that for so long now we've been discussing this overall range. I think everybody has been discussing this range, and as you know, the 50% mark is never the new time to initiate a new position, but as you can see from Friday, it's since moved higher up into our 227 target. So for now, monitoring to see if we can actually get to the top end of the range, in which case we now have opportunity if we can trade up towards 233, 234, that general area. We're either looking for a breakout into blue skies or a rollover back into the middle of the range eventually if we get rejection there. But again, that's sort of speculative speak. We're not even there yet. That's simply the place where new opportunity would arise. If we get there all in one go, I would just say, again, if the chart looks something like this with no pullbacks, on the first touch, I would expect a pullback for a higher low. And then if retested, that would set up the scenario for the breakout higher. Again, this is just what you would call coming up from the bottom. So all the way from here, all the way into resistance without any pullback, sort of ripe for some sort of price correction happening if we do get to that point in time. So those are my thoughts going forward. That's kind of what I'm watching out for here in the IWM. Do know I'm not looking to activate or put on new positions as we're here towards that 50% range. It's just more of that risk on, risk off indicator that I sort of use and keep tabs on. And right now it's saying more bullish than bearish, but certainly not out of the woods here in terms of getting out of the large box, which we've discussed for so many months now. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into Apple to kick off our companies, I just want to remind you of the backdrop of this overall pennant pattern that is building here on the daily time frame. But for now, we're kind of in no man's land, right? You can clearly see that if we just draw this out as kind of a range here, we're kind of, just slightly above the midpoint of the range. So it's not clear to me what the direction is going to be early on into next week. If we do go higher, we have 149.66 and then 151, just about the whole dollar as overhead levels. A clean breakout would probably happen with clean acceptance over 150. You can see a number of times we tried to get that here as well as here, but those just resulted in upper wicks. So I would say candle closes that happen above 150 would start to, build the confidence that a breakout could be underway. So please keep that in mind. To the downside, if we roll over, we do want to see the support trend line continually bring us new higher lows to remain more bullish and more optimistic about this overall pattern. If it does break down, the 50 SMA should be the line in the sand, simply because we haven't tested it in quite some time. If we do get into it, it needs to act as first touch support. If it coincides here at 144.31 as super support, fantastic. If not, it might climb a little bit higher and coincide with that support trend line. If it breaks, we're going down towards 141.69 and then potentially the gap fill way down here. I'm not anticipating that, but I'm just saying because we're kind of neutral here, because we're going sideways in this pattern, it's worth discussing both up and downside levels. Netflix had a fantastic move on Friday. We actually caught this one in the Discord. We were talking about this daily bull flag breaking out to the upside, and it came right into our targets here at 565.21. So nice movement there. However, if we just scrunch this chart up a little bit, what you'll notice is that this upper wick just formed, right in the zone, if you will, of prior resistance, and this, of course, was almost the top of the flag here. We did technically close in this zone, so that's noteworthy, and technically it is the breakout of the bull flag, so we're looking for upside continuation. But I would say the next healthy long-sided trade would either be an intraday scalp, or if you're someone who likes swings, the breakout up and over 565.21, because looking left here, you can clearly see there's not a whole lot of chart structure until we get all the way up and towards those all-time highs in here. Maybe there's a bump in the road here. Let's go ahead and just throw that level on the chart at 583.50, we'll call it, but obviously there's quite a lot of range until we get there. So Netflix is looking fairly good here on the bull flag breakout. Just monitor it for upside continuation. If we fail under 557, the line in the sand has to be the bottom end of the flag here at 545.89. If that goes, then this is nothing but a huge failed breakout. I would start to target lower areas, probably coming back down towards this 524.77 mark, but for now, remain bullish until otherwise proven. So Tesla is actually starting to exhibit some nice 4 days of consolidation. It's sort of forming a bull flag, right, if you do something like this. So we are going to favor upside if we can take out 714 and then after that 725, right? That is ultimately the level that will unlock the door up to about 750. That's a great trade right there. That's something that I've been watching for some time. We'll see if we can get the breakout up and out of this bull flag consolidation as of right now. The line in the sand to the downside, as we discussed with Netflix, is going to kind of have to be right here. It's almost flag lows, but more importantly, it's this prior structure breakout point at 694.18. If we start trading underneath that, there might be some sort of support here at the support trend line. Also, both critical moving averages, the 200 and the 50, coinciding with the support trend line. So maybe this is just a zone of support down here. That's kind of your line in the sand area. That's not very helpful from a day trading perspective, but from swing trading, certainly if we hold this area and bounce back up, that would certainly count as a higher low from, of course, what we had here as well as back here. If that gives, obviously it's back lower. We have 667.50 and then 650, we'll call it the psychological number. Anything underneath that does start to violate or create at least an equal low. Then you have to be on the lookout for a trend change, right? So for now, Tesla, everything hinges upon remaining in this consolidation and or breaking out. If it breaks down under this very critical area of support, remember moving averages, support trend line, horizontal level, if that goes, kind of looking dismal here, I would imagine we at least make an equal low to 650 area. So Alibaba, the people have spoken, although this chart is hideous, and again, we do not recommend swing trading it. People do appreciate the levels, so for now, it is remaining in the video. I will just point out that on the week's worth of price action, essentially, we had a number of gaps. Some of them filled, of course, this one right here, but now we're left with an unfilled gap overhead from about 161.73 up to 164.86. That would be an upside target or upside trade if we do get into that range. Plenty of meat on the bone for that one. I will just make note that this level where we bottomed out from Friday is essentially the 38.2 Fibonacci retracement. If we go from the low of this prior move to the high of that move right there, that's essentially the 38.2. So if we hold that, fine, okay. If we start to give it up, I would argue it's very likely we come back down and make a new low towards 153.27. So be on the lookout for that. Upside targets beyond the gap fill above is 168.10, and then of course the highs from in here at 174.21. Treat this one with caution. Intraday trades only. Having a look at Facebook here, looks phenomenal, honestly. If we remember back, this was the double bottom. This, of course, is the neckline. And on Friday's activity, we sort of solidified the fact that we were breaking that to the upside. Firm close up above, just below all-time highs here. I would expect some upside continuation. Any further pullback or consolidation that happens in this name wants to hold this 367 mark, simply because, again, that was the prior neckline and breakout point from in here. If it does go lower, maybe you use a line in the sand here at Thursday, Friday's lows around 364 the whole dollar, but I would really want to see it hold up above that 367 as mentioned. Obviously, blue sky levels up above, up and over the all-time highs. We're looking at probably a whole dollar, $5, $10 marks on something that's now going to be trading close to about $400. So that is the upside. To the downside, if we roll over, let's again just use Thursday, Friday lows as the line in the sand here at 364. If we roll over 50 SMA, this would also be, or this would, be if we do something like this. So here is a high. This would potentially be a LH for lower high. 50 SMA is not going to be as attractive as a buy this time around, close to about this 356 mark. So be a little skeptical of that. It will, move higher a bit, but overall, not too excited about the pullback buy that goes any deeper than that 364 mark. That would open the door, again, if this is violated here, to probably coming back down to this low around 347.84, call it 348, just as a general equal low, kind of like what we talked about in Tesla there. That's how that would unfold. But for now, it does look strong, favor upside as long as we hold these two numbers right here, looking for blue skies up ahead. So NVIDIA, my goodness, what a week it had. Obviously some strong volume on the follow-up of the earnings breakout to the upside, and now we have a line in the sand to the downside. The most bullish outlook on this chart would be consolidation here, breakout over the all-time high for new blue sky territories. Essentially look at 230 as a nice round number. To the downside, if this goes, then it's probably, maybe you could make the argument that we come here simply because that was an inside bar there on, what was that, Tuesday. So the low there is at 215.25. If that goes, obviously back down to the breakout point from 208.73, but as the chart currently sits, just extremely strong. I wouldn't be surprised if it cools off sideways through time, maybe a little bit of pullback. Again, 220 is an area to watch underneath that 215.25, but for now, just looks phenomenal. Wouldn't be the ideal place for new longs in my opinion. Again, remember the distance that we've essentially traveled from lows all the way up to the highs without real, pullback through price or enough time through sideways consolidation to make this a healthy buy. So again, maybe a little skeptical of new longs, but chart certainly looks good for healthy consolidation and then another momentum break to the upside. So Microsoft is kind of like the opposite or continuation, if you will, of NVIDIA, right? Clearly, we saw a nice breakout here. We consolidated a couple days, even started to pull back through price, and this is all healthy, right? Technically, we know that the area that needs to hold is around 295 the whole dollar, and you can see that this has been a very controlled pullback. It was a very tight 2 days of consolidation before breaking down. It's not like the sellers are taking full control of this name. We've even printed the start of a hammer candle on Friday. So to me, this looks like a healthy pullback that I would be interested in buying if it, wants to show signs of confirmation either over Friday's high or maybe come down even a little bit lower, put in a nice lower wick at 295 and then start a reversal out of that. So either way, I would say this movement is healthy and acceptable here in Microsoft. If we do work our way back up towards these all-time highs at 305.84, 85, call it if you like, then look for the breakout into blue sky territories. Probably looking at 310 as the next major figure, and then after that 315, whole dollars in the intermediary, if you will. Underneath our 295, if this consolidation leads to more, let's say there's some massive move to the downside in the Qs or the SPY, then we're probably looking at the prior breakout point from in here around 289.85, call it 290, and then after that the 50 SMA, right? Again, just like Apple, since we have not tested the 50 SMA in quite some time, because we are coming off of a new higher high, we would expect it to act as support on the first touch, so also looking for a pullback buy potentially at that area, right? So that would be pullback buy number 2. If pullback buy number 1 here doesn't end up working out, maybe it breaks down, it stops us out, would be willing to give it another go at that 50 SMA. And last but not least, we have the beast Amazon here, and this, all I can kind of see when I look at this is the beginnings of an inverted head and shoulders, right? So something that would look like this. Your neckline is, of course, the top of the gap here, and if it breaks out into it, then as we know, there's not a whole lot of overhead structure here that we're going to have to battle. Maybe a quick bump in the road at 34.30, 50 SMA daily, and then it's kind of up towards the top of the gap, closer to 35.50. So that's kind of what I'm watching out here from a longer term perspective. Ideally, if it consolidates somewhere in here, it wants to hold this 33.10 mark. Anything underneath that does start to put into play the 200 SMA once again. And because we've traded right through it a number of times now, I wouldn't place that much emphasis into it as holding it as support. So on the break there, obviously it's back down towards 31.80. For now, really just being patient, waiting for this pattern to build out. The ideal scenario is the inverted head and shoulders like this, boom, breakout up and into the gap over the neckline here at 39.90 or 33.90, excuse me. Quick reminder to hit the thumbs up button and subscribe if you have not done so already, and let's get right into these trade ideas. So the first one is on AMD. This came directly out of the Discord, so thank you for the recommendation and eyeball here. Noticing that we have an inverted head and shoulders or just a pressure cooker top, whatever you want to classify it as, right? If you do this, it's the inverted head and shoulders. Here's your neckline. If you just call it a pressure cooker top, the level to watch is 111.70. If we can break out up and over it, I would say we'd likely come back up towards these highs. I'm not calling for the all-time high again, all in one go especially, but I am just calling for higher prices, probably up towards this 118 area in here. Let's just map that out with a level. So yeah, right around 118 would be reasonable to me as an upside target on the breakout. Obviously, after that, you're monitoring for continuation into the all-time high and blue sky levels after that. Not so interested in this trade if we really start getting price acceptance underneath the right shoulder at 107.25. Next up, we have PLTR. This one is actually making its way back onto the list. If you remember, we covered it forever a while back. But anyways, back here on today's list of things to go over. Clear area of consolidation in play here, and we're starting to get a breakout. Oops, let me redraw that. We're starting to get a breakout up and over the top end of the consolidation. Sure, we had some upper wicks from in the past, but we never actually had a candle close until Friday. So for me, this is starting to look like a breakout could be in play over 25.50. Obviously, when we're dealing with ranges, we're looking at doublings of the range, in this case taking us up towards 27.50. And would you look at that, it just so happens to coincide with this prior pivot high. So this to me makes perfect sense. Looking for long intraday patterns to form, so bull flags early on in the week, looking for the move up and over 26.10, the high of Friday, for a long entry again to take us home into that fulfillment up around 27.50. That's going to be it on PLTR. Obviously, failure back down into the range. Not so interested in the trade at that point in time. NCLH for Norwegian Cruise Lines. This is going to be a pressure cooker top as well, just kind of like what we had inside of AMD. This one is less of an inverted head and shoulders, more just a structural element, right? So we have prior support, then turned resistance, resistance, kind of knocking on the door here, if you will, at 26.25. If we break out, next reasonable area I could pick out would be here as a first intraday target. I could easily see us getting there in one day, around 27.50, and then after that, prior support should offer some resistance closer to 29, the whole dollar. Not so interested in the trade if we start breaking down underneath 25.30. So again, that might look something like this. Hold out, wait for some consolidation. Maybe the second move comes like that. Again, not interested in the trade if we start breaking down underneath that level just there. Next up is going to be BA for Boeing, of course, and what we're seeing here is yet again another pressure cooker top. So knocking on the door. This is a much shorter term pattern, so I wouldn't really be looking for major follow through here. However, it is structurally important. So here at 222.91, call it 223, the whole dollar. If we get price acceptance over that, looking left, not a whole lot of candle structure in this very emotional breakdown here. I would argue the first key place to be keeping an eye on is the 200 SMA and the 50 SMA, the blue and green lines respectively here, kind of coiled up around 230. We'll call it the whole dollar as overhead resistance. So keep that in mind. This is going to be more of a breakout trade. So looking for the actual break to get in, not so interested if we just dribble sideways and or lower underneath that 223 area. Next up, we have GME for GameStop. And can you believe it? Someone like me actually watching GameStop? Well, yes, simply based on this nice bull flag that's been put in, it's an easy pattern to trade, right? If we take out the highs here at 227.75, you're just looking at the next major area of daily resistance, which happens to be way up there at 282.50. I'm not saying we get there all in one day. I'm simply saying that there's room to run overhead and the pattern is clean. With earnings around the corner, I could easily see that acting as a catalyst where a lot of people get excited pre-announcement, shoot the price higher, and we'll see what happens as the number actually comes out. But the pattern is clean, right? Any movement underneath 200 or 197, the whole dollar, 198, the whole dollar, would sort of invalidate the pattern. So we do want to see that hold up as support. GMA, simple pattern, not really in it for the short squeeze, just, sort of seeing that there's opportunity here. Very simple, right? Next up, we have Nike, and Nike is coming into a support trend line, but kind of on a lower high. So this is on the secondary watch list, if you will. If I do something like this, grab in our support trend line tool, go like this, you can clearly see we're coming into that support trend line with a hammer candle, but it was after we have already touched it, right? And on this bounce, we did fail to make a higher high. So again, not placing a whole ton of import onto this, but just noting where we are at in terms of structure. If there is a bounce, easily we're looking at that area right here to start acting as a pressure cooker top. So equal highs there. Let me grab the other tool at this number right here, 170.80, just about. If we break out over that, yes, after that, I could see us coming up and revisiting all-time highs. But until that actually happens, just again, kind of a secondary watch on the lower high trend line touch. Next up, we're looking at Etsy. This is another one out of the Discord, so thank you so much for recommending. What I'm noticing about the activity here is clean bullish movement to the upside, and on Friday, a nice inside doji in the top 50% of the range. I love this setup. It's basically telling us that the buyers were taking a breath, but the sellers were not able to take full control of the price action, and were not able to break it down back towards the lows of the breakout day. So for me, watching this consolidation, ideally it holds up somewhere in this range. If we do something like this, and it consolidates for a couple of days, puts in a nice pressure cooker top around that 215.70 mark, and boom, we get the breakout. Looking left for a target here, what are we noticing? Probably just this pivot area in here around 225.22, 220, the whole dollar, maybe a small hang up in the way, but ultimately looking at that prior structure as the main target. Not so interested in the trade if we break down underneath 208.64. Next and last trade is going to be on AVGO. Again, this one comes out of the Discord, so thanks a bunch for the recommendation and eyeballs on this name. This is a long pattern. If we actually scrunch this back up, you can just see how long it's been consolidating for, just underneath this resistance area here. So huge pressure cooker top in play. Technically, it did get the breakout on Friday. Keep in mind, though, the distance it's already traveled, right? So coming up from the bottom, already into resistance. I wouldn't be surprised if it goes sideways, consolidates. Who knows? I mean, it could theoretically get the breakout, but I would be much more, willing to take this setup if we get 1 day of consolidation, 2 days of consolidation, some sort of pattern here that's basically telling us buyers are able to take a breath and then make the move up and higher. 500 might be a psychological resistance overhead that you should pay attention to, but after that, it's really blue sky territories, whole and half dollars, intraday levels that do form. Not so interested in the trade if we start failing back down underneath our 295 area of resistance, this huge pressure cooker top. If again, if we get price acceptance back underneath, I would look for more, just this sideways consolidation and chop, really a breakout trade here on the horizon. So also keep in mind, earnings are around the corner, could act as a catalyst to move it higher. Just something to keep on your radar, right? If you're doing it with options, be skeptical of, the implied volatility crush that may come if you get short dated expiration options. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know down below in the comment section. I love hearing from you guys, or by simply leaving the video a thumbs up. If you enjoyed it, again, do all that stuff. We wish you all a green trading week.